trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I want to remind you, yesterday we talked about this big move down in cattle. There was a 382 this morning. It's working out very nicely if you were able to do that trade. All right, now let's take a look at the Dow Jones here, folks. I want to show you, we got so many things to cover. We already covered this to show you that, where we were. Let's get this out of the way here. I want to show you the Dow Jones because we've had swings in the Dow Jones we haven't seen in quite a while. We were down early this morning. And remember yesterday, folks, we spent a lot of time talking about this because there was the ABCD right there, and it measured to 18160. The low was 18147. What did we do? We rallied. Hello, are you ready? 600 points up. We went negative, folks. 600 up, 600 down. We actually went negative a little while ago. And that's what we're seeing. Well, let's move on and just take a look at a 13-minute chart, and you'll see the swings that I'm talking about. Look at this. This is where we went negative, and now we're bouncing back again. So this is a really wild day here in the market. You can see the swings that we're looking at here. But the numbers hit yesterday just as we were talking about it. And, sometimes they work, sometimes they don't. Let's take a look at the notes. If you remember, we were saying that if you were to do anything, the one that you wanted to be watching for to be buyer would have been the notes, because the 10-year we're looking much better. There was a head and shoulders pattern that we had. I'll try to get that line. There it is. There was our move here. There was our 382. Then we backed off, and look what we did. We made an ABCD, went right to the 50%. Okay? I mean, that exactly to the 50% level of the high. Let's see if it was, no, it was not a 382. No, didn't make a 382 of that one. That was the 50% retracement of this whole high back in here. And that's your A, B, C, D. And, look how quickly it gave it back up. I mean, there wasn't much. Let's look at this on a real short-term basis. You'll see there was a huge spike here and then the sell-off. But, here's something to look at. We've had a big move down, so let's see if this big move down will correspond to the old 382. And there it is. There should be some support possibly in there. All right, now we've had so much stuff going on in gold and silver. Let me make sure I covered everything in the stock market that I wanted to cover. Jeff Hughes will be our guest at the break, so I wanted to make sure we covered that. Now I want to show you something here in the natural gas, folks. Okay, there's natural gas. You can see the 382 from that high back here. There it is again right there. There's your 382 exactly right there. I mean, that's a really nice one. And what's interesting, I happened to be watching this one because I was watching sorry, boys and girls. Folks, I've had very little sleep. Anyway, there was your 382. There last night, and you can see it's been following along, pretty nicely. Remember the last part of the day, it doesn't do. Unfortunately, I didn't get all of that, but I got part of it. Yeah, you notice here that we had another move right here, and usually when you make a new low, you got to go back and recalculate the 382, and if you would have done that, you would have seen here that it misses it by about $1, but you can see it started to, this is really a big move, folks. This is well over $3,000 in the natural gas today without much. Let's do the hourly. I think there was something there that was interesting to look at. Yeah, we just did that. Okay, got that out of the way, took care of that. Okay, we covered the indexes. All right, we're going to look at gold and silver now because we've made a new high, contract high in gold, folks, just a little while ago, okay? That is a new high. up there, and with the gold. We went above 44,000. We hit 44,009, and we immediately dropped $50. That was a $50 drop right there. So you can see we're having lots of volatility. Putting this up here on the smaller time frame, there's where you are. You can see you had a big move up here. Now we've broken down. Now this is definitely a strong trending down. So that should be a 382 should be coming in here. Oh, we've already come in there again. It's going to come in again. We've hit it once. Watch this, folks. This would be a good one to test this theory, because there's your move down. There's your ABCD coming in on the gold, right? I'm going to do this trade because I got to pay a couple of bills here, make up for these. Hold on. That's 43.75 is where I'm going to short it. Stop at 43.85. Okay. Now on the way up, I happened to be watching this morning because we had a big break. Okay. Now when you have a big move like this, I always talk about watch for the first retracement. And what do you think that retracement was? I happened to be doing this one, so I was watching it. There it was, right there. And then boom, away that it went, making new highs. Believe it or not, that was $80 up, $50 down. And so here's where we're looking at the ABCD coming in right here, right now with this. Remember, when I put trades on here, folks, you got to put them on and put the stops in, because they don't always work. And that's the key to what we're watching here as we look at some of those. We covered the notes, we covered the gold. Now we're going to cover the silver. And boy, folks, you talk about a market that likes to rock and roll. Here's silver today. Here's where we are, just to show you where we are the last couple of days. Now, silver, you notice here this is the 17th. Now, remember, gold made a new high today. Silver did not. The other thing is silver broke below the 382 for the first time. Okay, now it broke below the 382 and then had a really big rally right here. I believe it was probably right at 78%. It's a very wild market over there. Yeah, well, it goes right to the 61, and here's where it is now. What I'm doing now in the gold, because they're different markets, folks. This market is, it's a very, you can see that when it's powerful, it's really powerful, but you got to be careful. Gold is probably one of the best trading things you could find. The euro's number one, I believe, but the gold would be number two. But this is where we're looking at to sell it at 43.75, and then if we do get filled, we got to put a stop at 43.85. Now, the other thing that you want to do when you watch this to see if the market is still following along the numbers from your high to your low, where to go? Exactly to the 786. Now, it's amazing that it does that, but that's how it operates. So let's keep a close eye on that. I've covered the cattle. All right, now let's go and take a look at the euro, because we've got a big thing happening going on in the euro today. Let's get this euro up here this morning. Everything was jumping around today, folks. I mean, this was a jumping around kind of day. Not to be unexpected, because we had all those ABCDs hitting yesterday. Okay, there is the euro. And as you can see here, we had a pullback yesterday right here to the 50% level. And then all we did during the report, there's your A, B, C, D. You can see that's all we did was make that little gartley, because this is telling us that the dollar index is held, folks. We've held that real critical level that we were talking about. And we're going to cover that when we get right back, okay? Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, I want to show you the euro here this morning. You can see the report came out. You can see the first pullback here. Looks like it was in exactly 382 on that report. There it is, right there. That tells us your target should be up in here. But look at there's a 3 drive here, folks. Look, there's drive 1. There's drive 2, there's drive 3. Lines up really nicely. You can draw them in if you like, A, B, C, D, and then we came down. Here's what I wanted to show you. You notice here this is pointing up, correct? Right here is where it stops going up. But look at the mirror image right here. This is why this is all numbers that we worked on, folks. It's just looking at key dates, previous day. All right, what we're going to do now is we're going to take this and we're going to flip it over, just so you can see what the mirror image looks like, and then you can see where it can be helpful to you when you learn to do these things. Just watching the key times. Those are in the Floor Trader's Handbook also. There's your low of the day right there. And there's your high right up in here. And what it's been doing, it's been following this right now. And you can see right now it is no longer following this. So the last part of the day is really nothing. But there was your key of the day, and that gave you a good profit potential right here. But that's you got to do them all. But you don't know which. Oh, shut the front door and raise the rent. I'm upset, boys and girls. We missed it. We missed it by we missed it by $1, folks. The short sale in the shucks. Sorry about that. There it is right there. And but anyway, we missed it by $1, so $1.50 actually. All right, let's move over here. Take care of this. Someone asked a question about the Treasury bonds that we do watch. You can see here we've had a pretty nice movement. Let's get the hourly up because we'll start with the daily because that's the head and shoulders. Okay, it's out of whack here. You can see the shoulder, head. Look all we've done here, folks. Refresh here. Maximum. Okay, this was our rally today. Okay, now you can see our rally off of this high right here was exactly 786. Okay. Oh, Yes, it was exactly 786, and we backed off just a little bit from it. So, I mean, whatever the news was, it didn't react to the bonds very much at all. The notes were better. Remember, notes have taken out these highs. See, notes went up and made an ABC here at the 382. The bonds did not. So bonds are the weaker. If you want to sell something, sell the bonds. That's the one that you probably should be focusing on if you wanted to sell that one. Okay, now let's move over and make sure we cover all of the things that we're covering here right now. So give me a second to correct these sheets so I all have them ready together, and then we can pull out the ones that we need to look at. We've looked at the Dow Jones, and boy, it's flat out all over the map for sure. Now let's look at the Euro, Russell, because the Russell, where are you, Russell? The Russell actually, I still can't believe the Dow Jones went negative and then back up. I mean, it's had a 900-point swing. Here's the Russell. Okay, now there's the high we made way back here on the 12th. Remember, that was the big Bradley date. We came down. There was the bottom. Hit it right on the money. We rallied pretty good today. Backed off. And didn't stop at the 382. We came right down here to 618, and now we're still up on the day, but only marginally. I mean, this doesn't look like a very bullish chart actually, because you've got lower tops and lower bottoms, and it did pretty much what you wanted it to do as far as make a bottom in here and having the rally. But the S&P's having a good rally, and the Nasdaq is El Fuego. So those are the ones. Now let's take a look here at the crude oil. All right, here's our crude oil for today. Okay, now last night, if you'll remember, hold on, get this over here, right here. There's where we were yesterday. Get that out of the way here. There was yesterday's action right here. There was the first 382 right here. There was a second 382 right here. Then we have the big pullback that led to the ABCD to the upside. I think it missed it by a hair, but came pretty close. Yeah, see, it misses it by just a little bit. And then what we've done now is just we had a little Gartley here this morning, a very nice one, actually. You can see there's your ABCD pattern right there. And if we put that in, you'll see we'll come over here, draw that in, and there's your ABCD right at the 618. And you can see we have a pretty nice rally here that occurred where we rallied about a buck and a half. I don't know, about 80 cents, which is not much, but for day trading, it's still pretty good. Okay, now let's move over, and someone's asked a question about soybeans. So let me get over here, and they've been getting the bejeebies hit with them today. So we'll get up here 1 second here. Okay, here is the soybeans. Those are January's. See if they came back a little bit. No, they're still whacking them pretty good. So you can see here, we've been heading down here for quite a while now, and we're still going lower. Let's look at this on the daily, because we're probably going to be making some significant, here we go. There's your 786 in here tomorrow, folks, at 1046. That's 9 cents from where we are right now. Let's go to that hourly chart, and we'll see some swings coming down. Well, you can see there's all kinds of them in here. Well, there's just one after another ABCD. If you like ABCD, there's a whole bunch of them. And we got a 3 drive. Well, we had 2 3 drives. And this is not unusual, because you're in a downtrend. You're going to see markets react to it. There's your first 3 drive pattern, correct? Now get ready, because this would be a good one for tomorrow. Drive 1, drive 2, drive 3. So you got to draw that one in. And put that in like that, and it catches this one, and bring it down to here. That'll bring you in right about there. But what we want to do is to go back on that daily and find out the 786. And there it is right there, 1046, folks. Lots of ABCDs and stuff right there. 1046 in the beans. That's 9 cents from where we are right now. If you buy them there, you're going to become a farmer. You got to put a 10-cent stop in them, but that's a pretty one to pay attention to, okay? Remember that nice little 382 we had right into that gap? That was a big one, okay? And then now we're getting down here, and they loved them up here. They hate them down here. So that's the nature of the game. So you got to remember to do that one at a time. Jeff Hughes will be our guest here, coming in at the break here for a second. And I want to keep an eye on most of these things are still acting pretty good. And, of course, the end of the day, we got 3 hours to go. 1, 2, 3, What time does the market close? At 2 o'clock, I guess, right? I don't even remember. No, it closes at 1 o'clock. Sorry about that. 4 o'clock New York time. All right, there's where we are right now. We've got all these things are going. Notes are selling off just a little tad bit as usual. And let's move on here to the next one. All right, we have a question about Apple, and we'll be right back with Jeff Hughes, but I'll bring up the Apple chart as the music begins to play, and you'll be able to see how it's doing. It's probably going bananas to the upside, and it's not. So anyway, that's a surprise too. So there's where we are with Apple, and there was yesterday's high. There's the low, ABCD. Ooh, that's a nice ABCD here today if you were day trading. Yes, sir. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I believe we have Jeff Hughes of Alpha Insights in the room. Jeff, are you there?
You got me, Larry. How you doing?
I'm looking good. I'm not even used to this volatility, and I thought I'd seen it all. Jeff, I was watching the Dow up 400 points. I turned away, and it was down on the day, and the next I look back, it's back up 300 points. It's moved over 1,200 points today, up and down.
Yeah, they don't like that inflation print and the CPI today. A lot of people are talking about how the limited data because of the government being shut down really skewed it, and how they just kind of made up some information or didn't use it. So it all looks pretty suspect at this point.
What are you seeing in the market overall? I mean, we're still in a downtrend. We've been basically making lower lows for the past 4 or 5 weeks, but with this big rally today, I don't think it changes very much. But what's your opinion?
No, I don't think it does either. I mean, at the end of the day, I think we've just come back and retested the level that broke down yesterday, and we haven't pushed through it. So I spend more time on the S&P than I do on the Dow, but I've got a chart of the Dow. Hopefully you got my chart deck that I sent over to you.
Yes. I believe they're showing it in the room. Let's hopefully that they are. If they're not, then I've made a bad mistake here.
I don't see it yet, but,
it wouldn't
but I can
surprise
tell you
me.
a little bit about.
I'm not very.
I'll tell you.
You know what? I think it's my fault. Jeff, give me 1 second here, and I'll see if I can do this. I should be able to do it very, very quickly because you've already given me the charts, and there's the deck right there. Oh, sure enough. This is my fault, boys and girls. Hold on just a second. I'll get this up and ready in just no time at all.
Yeah. Well, let me talk you through the first chart, which will show is kind of the bull market of 2025. It's a scorecard I like to show every single week when I publish my regular note. And what we're seeing is that silver has radically outperformed every stock market. Gold is done, exceptionally well as in addition, but is lagging silver by about 50%. So gold's quadrupled the return of the S&P, and silver's 8x year-to-date performance. So
wow, that's amazing. Look at that. That's like a giant flag. Like compared to Bitcoin, are you kidding me? Oh my God.
Bitcoin's down for the year, down over 7%. And you look at the median stocks only up 3.25%. That's underperforming T-bills, which is up about 4%. You look at the kind of blue chips, the value stocks, the small secondary stocks, they're all lagging dramatically. I mean, the S&P through yesterday's close were up 15.7%. The growth names, the big NASDAQ 100 names, they're up a little bit more, up 17 and change. And of course, we're up some from that today. But, here's a couple things I would point out. Number one, foreign stocks. Foreign stocks are up over 30% as of today, and that's widely outperforming U.S. stocks. And I think that really speaks to breakdown in the U.S. dollar, and I expect that trend to continue into next year.
Okay. Now you got a chart about average valuation. Boy, that goes back quite a ways, 30-some years, and 35 years for heaven's sakes, and it's up near the highs again.
Yeah, it's my entire career basically, and I'll tell you the thing that's interesting to me about this is not that. The S&P is priced at 23 times, which is nearly where we were at the top of the dot-com bubble. But the average stock, when you look at the equal weight index and take the average PE, it's about 17 times. And that's 2 turns higher than it was back in the dot-com bubble. And so, what we're seeing is basically the average stock is dramatically overvalued relative to its history. Nearly at a record peak. And the only reason that there was a period that was higher was during the COVID explosion higher, where, basically the speculators took everything up at a radical pace, and then it came crashing down in 2022.
Okay, you have to explain this next one because I don't understand stocks. The hedge funds are borrowing money. Is that what they're doing?
Yeah. So, your hedge funds, they borrow money a number of ways. They have prime brokerage accounts. They can borrow up to 90% versus certain assets. And they also tap the repo markets to get leverage. Well, both of those markets have basically doubled over the course of the last year, from around 2.5 to nearly 3. Well, I think about 2.25 to about $3.25 trillion. Okay, and then when you add on top of that the margin debt, which is at record levels of 1.25 trillion right now as well. I mean, you're at nearly $7.5 trillion. I mean, that's how much leverage is in the system. If you compare that to leverage at the dot-com bubble, at the peak of the dot-com bubble, it was less than $1 trillion in total leverage. So we're more than 7x leverage what we saw at the peak of the dot-com bubble, and valuations are higher today.
Well, why not? Because it goes up every day or every other day. This is the Mag 7.
Are these guys running a Ponzi scheme basically that, basically runs the risk of ruin because they're so leveraged, they're so concentrated in these large cap tech stocks?
Mm-hmm. Well, I don't. This is the Mag 7 chart. You want to explain what that is, Jeff?
Yeah, what we did here is we've carved out the Mag 7 performance over the last 5-6 years from the rest of the S&P 500. So the flattish green line, that's the S&P 493 x the Mag 7, and then the blue line is the Mag 7. And you can see that all of the gains over the last 5-6 years have basically come from the Mag 7, and the rest of the market is essentially flat over that period of time.
Okay. All right. The next one we got coming up here, we got another one before the break. Is it on the magazine cover? Who's what are these dudes doing up there? That's the AI guys. I can see them. Yeah,
that's
I can
right.
see
So you probably
Jensen
know
Wang
this name.
And okay. Which one are you? You're the third from the left. Yeah, I see you, Jeff. Yeah, there you are. Okay.
My old pal Paul McCrae Montgomery helped kind of create this sentiment indicator called the magazine cover indicator. And his theory was that when you see like a major investment theme on a regular, type of magazine, not something that's oriented toward business, but just a general purpose magazine like Time, it tends to mark the end of the trend. And actually, when you see them as the person of the year, it adds incredible magnitude or magnification to that. And so, the probability is that this AI bubble is at or very near the end of its trend. And as we saw in the prior charts, the setup here is absolutely horrific in terms of the leverage, concentration, and valuation factors. And if this all is true, then the next chart is probably the most important chart that you're going to see today.
Well, I remember the person of the year. It was Time Magazine with Pete Rose. Next year, he was banned from baseball for gambling.
Right? Yeah. It's so typical.
Here's where we're long-term Elliott wave analysis.
Yeah, we'll come back and talk about that after the break.
We sure will. Thanks, Jeff. We'll be right back, folks. Jeff Hughes, Alpha Insight. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back with Jeff Hughes, Alpha Insights, long-term Elliott wave analysis.
Yeah, we started out this conversation, Larry, talking about the Dow, and this is a long-term chart of the Dow. It goes back to the 2009 low at the end of the GFC, and we call that cycle wave 4. That was a cycle wave 4 low, and so everything that's happened since is cycle wave 5. And cycle wave 5 is a 5-wave advance at primary degree. That's the parentheses, 1 parenthesis, 2 parenthesis, and then in between that we've got intermediate term, okay? These intermediate term waves, 1, 2, 3, 4, 5 to end primary wave 3, then a big A, B, C to end primary wave 4. And this last move up has traced out a textbook ending diagonal triangle formation. It's a terminal pattern that only occurs at the end of a trend, only occurs at the end of a trend. And what it's probably most notable by its converging wedge, right? You've got these upper boundary and lower boundary that are converging from a wider angle to a narrower angle. And what's happened is wave 1 has topped at the upper boundary, wave 2 at the bottom, wave 3, wave 4, and that's formed that wedge. And now intermediate wave 5 has peaked at the upper boundary and is reversing, just like the textbook inset would suggest. And a breakdown, I think, below the November low would confirm that this pattern is complete and suggest that, basically super cycle wave 4. So this whole thing would be super cycle wave 5 or wave 3 rather. You'd have this massive correction. So we're looking for something that's going to be epic when it breaks down, something that could take the Dow from, say, 48,000 where it's topped here down to around 25,000 or lower before we see the end of the first wave of selling. And so that's our big picture analysis. The next chart takes a look at our short-term analysis.
Okay, there's where we are. Oh, yeah, boy, that's a rolling top.
That's right. And here we're looking at the S&P 500, which, is more, I think, relevant to most traders, right? And we've got all the big stocks, market cap wise, they're holding the big weights there. So about the top 10 market cap names are 40% of the index. In the Dow, you don't have that concentration because it's a price weighted index. So it looks a little more normalized, where here you've got this big, heavy concentration. So what's happening is you're seeing these big stocks roll over, even though they're all up nicely today, Tesla making a new high, et cetera. Most of those stocks are down quite a bit. Oracle, for example, is down 35% from its top. And so they're putting a lot of pressure on the index. And my suspicion is that, we took out the 50-day moving average yesterday. We rallied back to a breakdown level and then reversed. And I think that we're probably on our way to test the 200-day moving average. And once we take out 65.50, that critical support level, that will resolve this kind of head and shoulders top that I have traced in there. And that projects a low of at least 61.22. And I think that will be kind of the small degree or minute wave 3 low. Then we'll get another bounce.
Okay, the next one is sticking with the leaders. But Jeff, I made my first fortune in silver back in 64, 65. I'm just a little, dirt farmer out of, Terre Haute, Indiana. I was in graduate school, and I guess collecting these silver certificates. And boy, I still own silver dollars, but I'll never sell those. Or I've collectors. The kids are going to get them. I'll never see them again. But I love silver. I love the color of the silver. I love the coins. I just like everything about them.
Well, here's the thing, Larry. Silver's basically up 125% year to date. It's up maybe 300% over the last few years. We're around $60 plus per ounce of silver right now. And what does that mean if you're a silver miner? Well, it means that every ounce of silver you pull out of the ground is profitable now. Okay, so here when I say I'm sticking with the leaders, I think you gotta own what has the momentum and strong fundamentals. And silver miners, and this is the Junior Silver Miners ETF, SILJ, is breaking out of a very classic pattern base formation of the cup and handle variety. It's taken out that upper neckline. It's consolidating around it. And I think it's setting up to make a nice move to $33 over the course of the next, several days / weeks. So this is a shorter term trade, I think into year end, maybe mid-January tops. As long as it holds above, say, 26.5, I think that the setup is solid. We do see that momentum is starting to wane a little bit on the MACD, but it hasn't set off or triggered a MACD sell signal. So it could just be a little bit of a pause here. And once price starts to break out further, momentum will follow. It's a lagging, in other words, it's derivative of price. And so my suspicion here is that silver miners are ready to make a big move. And then once we hit 33, then that further resolves the larger degree pattern, and we've got a long-term target price of $56 on this mining index.
Okay, now you've got some
basically a double.
It looks like you're winning on 3 out of the 4, and that's pretty good because
so
it's 9%, 6%.
SILJ,
one
we
loser.
added this
XLE,
morning.
what is that? Energy?
Yeah, that's the energy ETF, sector ETF.
Okay.
But the gold miners are up 10% since we added that at the beginning of December. We added the silver miners this morning. We've got some, the DBB is the industrial metals. We've had that on for a while. It's kind of been slow, slow and steady. My target price on that was really looking for something like, 20, 30% upside. I think it's probably more like a 10, 15% winner before we get stopped out on it. But we'll see how it all plays out.
And this is you're up 27% for the year? Wow,
this is the tactical asset allocation model. So as everybody knows, I write a newsletter called Huge Insights, The Big Picture, available on Substack. And in that newsletter, we do this model portfolio. And that portfolio looks at stocks, bonds, commodities, and currencies. And so we take our mix of all those things. And this is what that portfolio has produced. Every single month this year has been a positive absolute return. And we're beating the S&P 500 by 952 basis points through the end of November.
That's good. Hey, listen, my friend, I want to have you again after the first year. I want to wish you and your family a wonderful holiday. I think you'll be someplace far, far west. Is that correct?
As a matter of fact, that is true.
Well, Hawaii is a beautiful place, especially when you're going from Minnesota.
Exactly. That's the whole point.
I love Minnesota too, but it's a little too cold for me. Hey, happy holidays to you, pal. We really appreciate you being our guest here today.
Likewise, Larry. Thanks for having me on the show, and have a Merry Christmas.
You bet. Okay, Jeff Huge, Alpha Insights, folks. So here, just give me a second here, and we can get back and see what we've got going on with all these things happening. And there's so many things jumping around, you don't know where we are 2/3 of the time. The one I'm paying real close attention to here is the Dow Jones and also the Russell, because you can see we're having huge swings in these things. So that's interesting to see, especially the Russell, because it was so bullish early this morning. You know, we had this huge run, and then we pulled back, and then we've not been even back to revisit the 382 here. So we're going to take a break here, and we'll be right back to finish up the show. So stay tuned, please.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're going to finish up now. You see, gold has made a new high on the year from way back here in October. Our new high today was $409. We reversed to $60 of that already. You can see we're setting here, right in here. This is indicative, folks. There was a last 382 right here. So we get below this number here, which is 43.40. and that's early morning low. That means there's going to be pretty big reversal here. We've already reversed $60. You can see by the way it's coming down, but it's made all the objectives. There was a number we were looking for, and that came in at 78, 43.78, but we did go higher here this morning, up here at 43.09, and then we reversed. Looking at this from a shorter time frame, I was watching this right here because you know how I am with ABCDs. I said, wow, look at this one. I said, this looks like it's an ABCD. Now, it's only a 3-minute chart, but there's your AB leg right there, and there's your CD leg right there. And that came in at 406, and the high was 409. I didn't do it. There was the place to do it right here. It would have been your first 382 retracement. And then, of course, we just missed this one here. That's the one that was the real 382. And we had an order sitting there, but as you can see, we missed it by a heartbeat, and not much you can do about that. Now we're starting to head lower, so that's it. One good thing, folks, we're having great volatility here, and also with the holidays coming up, try to be kind to your neighbors, because not everybody out there has it as easy as other people, and you want to share some of the stuff with whatever you have, whether it's just a piece of bread or a pat on the back or even a prayer. But that's what you want to try to do. So live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side tomorrow. Hopefully we're going to have Mike Moore of More Analytics as our guest. So we'll see you tomorrow, folks.